Hi friends, good afternoon. In this video, I would like to explain the repo rate concept. What is repo rate? What is reverse repo rate? Why the repo rate should be adjusted from RBI? How it stopped for inflation and the monetary policy maintenance, RBI net income. These are all the concepts I would like to explain this video. What is repo rate? Commercial bank lending the money from RBI for short time of period and specific interest rate. That is called repo rate. Take down the example, Adani required 8,000 crores from SBI India, but in SBI India they have only for 4,000 crores. Remaining 4,000 crores they don't have. On the time, SBI India go to RBI and provide 4,000 crore government security to RBI and lending the money. RBI give the 4,000 crores to SBI. SBI provide totally 8,000 crores to Adani Group. What is the use? Suppose Adani Group lending the money from SBI, they open some industries, they provide the job opportunity to the people. So economic growth will be increased. The repo rate decreased from year by year. Why it should be decreased? Because we need to grow our economy. So that reason the repo rate should be decreased by year. Whenever the repo rate should be decreased, people are lending the money to bank increased. So job opportunity should be increased. Whether people need a home loan, car loan, or any personal loans, they approach the bank and getting that loans easily. Suppose the bank give the loans, it should be useful for public people because more person get the jobs and economically people growth also increased. So that reason always repo rate should be decreased whenever the country is need to grow. So that reason 2032 still on date. If you see the repo rate percentage, 2013 I think it's for 8.5% for repo rate, but current repo rate is for only for 4.4% because we need to grow our GDP growth. So the reason the repo rate should be increased, repo rate should be decreased. If the repo rate should be decreased, after only the public go and approach for the bank and lending the money. So okay, whenever we need to grow, on the time repo rate should be decreased. Suppose in case country goes to inflation, on the time what will happen? On the time RBI should be increase the repo rate, because suppose in case increase the repo rate means what happen? Banks are never go to approach for RBI, and they what are the money in their hand, they need to put saving from RBI side, because RBI give high interest rate of saving account. So that reason bank directly go and approach for the RBI, and suppose I have 8,000 crore extra money in my hand in SBI, the SBI directly go and approach for RBI and invest that 8,000 crores from RBI and getting the interest from within a short period of time, within a 1 year, RBI pay the interest. That concept is called the reverse repo rate. Repo rate means commercial bank lending the money to RBI on the time, we call the repo rate. Reverse repo rate means RBI get the money from commercial bank, that is called the reverse repo rate. Based on this repo rate and reverse repo rate adjustment, only the monetary policy should be work. The country need to stop country need to groom economically. They need to plan to stop inflation. On the time the repo rate should be increased or decreased. Okay, how this is for repo rate and reverse repo rate concept. Okay, take this example again. Adani required 8,000 crore from SBI, but the SBI have only 4,000 crores. They don't have a remaining 4,000 crores. So go and approach for RBI and getting for the 4,000 crores. Okay, what SBI do? SBI go and approach for RBI. RBI has some lending property. On the time SBI give government security bond to RBI. I given 4,000 crore government securities bond. Just getting from this 4,000 crore government security bond, after you give for 4,000 crores, I will prepay this 4,000 crores amount within a 1 year short period of time and specific interest. Okay, 1 year it's come. Okay, suppose SBI need to repay that amount within a 9 months. On the time again the SBI go and approach for RBI and I would like to pay the amount and please provide my government security. RBI, how RBI should be charged? RBI never took money from SBI. Suppose the SBI give 4,000 crore government signal, they given what percentage of interest they need to collect from RBI, SBI, that amount should be deducted from government security which is handled from this SBI bank. Based on the government security wise only RBI collect the interest. RBI never collect the interest from commercial bank from directly money. It's always collect the interest from government security. If the repo rate is decreased means country need to be grow economically. If the repo rate, reverse repo rate means the repo rate is increased means country goes to inflation. So that reason RBI plan to stop money supply from this public. All the money, all the banks should be invest their extra money to RBI. RBI provide the interest, because if the bank have extra money, that on the time only bank provide the lending to public. In case country's inflation stage, on the time RBI do the reverse repo rate, the bank should be deposit all the money to RBI, because the bank think about their own security. Based on their reverse repo rate, these two concepts only adjust for the economic growth. Okay, I will tell that how it's RBI get this net income based on this repo rate minus reverse repo rate. What is the percentage come? That is for RBI net income. Another one, always reverse repo rate should be less than for repo rate, because I will provide a high reverse repo rate. On the time what they do, bank won't invest all the money to RBI. They never circulate the money to public, so public won't grow. So that reason always reverse repo rate should be high compared with repo rate. Thanks for watching this video. Kindly provide your comments. We will kindly provide your comments. Share some interesting financial topic.